Welcome to State of Wellbeing, a podcast from South Dakota State University. The State of Wellbeing is a holistic well-being podcast with the goal of supporting the campus community as we strive to be a growing, high-performing, and healthy university.
All right, welcome to the State of Wellbeing podcast. I'm Shari Landmark, Chief Wellness Officer at South Dakota State University, and I am thrilled today to have one of my lifelong friends joining us, Jennifer Olson.
Hi, I'm Jen Olson. I go by Jen. It's just a little bit shorter. I work at Bankstar Financial. I've been there for years. I've actually been in banking and finance since I graduated SDSU a long time ago. So 25 years plus. I am a Senior Vice President of Business Banking at Bankstar.
Yes, and we are both proud Jackrabbit alums.
Oh my goodness, yes.
Yes, absolutely. Well, the month of January, we are celebrating and learning about how to be financially fit. New Year's resolutions, there's a lot going on, but there's also can be very stressful times with finances. And so we kind of are doing a 4-part series this month on financial wellness, and we're really excited to have Jen here with us today. So University Wellbeing also offers an account called Cash Course to all SD students, state students, and faculty and staff at no cost. It's free. But there's just different areas, 6 different modules that have different aspects of financial. And so this podcast kind of falls under kind of the borrow area. So today we are really focusing on kind of the pros and cons of credit and debit cards. Sure. So, first of all, maybe Jennifer, what is the important questions let me start over. So Jen, maybe our first question for the day is, why is it important for students to understand the difference between debit and credit cards?
Well, they're 2 completely different products. I mean, it's like comparing an apple to an orange. They're different colors. They are the same shape, but they taste different. You peel them different. So they're in the same category of fruit and cards, but they're different. So that's like probably a major thing people need to understand. You cannot intermix them. They act differently. Does that make sense?
Interesting. I love how you put the fruit and vegetable thing is. That's so perfect for this podcast. Now, way back when, sharing maybe an experience with your first credit or debit card, as Jen said many moons ago, there weren't debit cards when we were in college. So I remember being in the student union breezeway, and credit card companies would be out there and say, sign up for a credit card, you get a free T-shirt. Mm-hmm. And I am guilty, and I shouldn't say guilty because I'm still using that credit card today, but what are kind of the experience that you maybe had?
My first experience, going way, way back, I was probably, of course, I was a farm kid, and we had livestock, and I had pigs, and every year we were able to take one pig and we picked her out, and then when she had baby pigs, those were ours, and we had to feed them, take care of them, sell them. So back then, when you did that, you just put it in your checking account. We had checks. We didn't have credit or debit cards to go along with it. Everybody who has a debit card has a checking account. Some people don't really link that together. So if you have a debit card, yes, you can write a check. So anyway, that's probably where I started. My first credit card I actually got when I was a freshman in college. I'm just going to throw it out there, in 1994. I still have that credit card. It's probably a little bit more sentimental to me. It actually has a pretty good rate on it. There's some perks on it, but nothing great. And why it had a very low, I think my first credit limit was $500. End of story. Because they asked, what do you want? I said, I don't want a big one. I was a little scared of it because I'm like, well, this was for emergency purposes. We would go somewhere, say we would travel to Fargo or Vermilion to see our friends in college. And if you didn't have cash or a check, you didn't have anything. If you got into a little bit of bind and your debit card you didn't have any money, you got at least buy a tank of gas with a credit card. And that's the only reason. It was emergency purposes only. And that's kind of when I started using it and believe me, I got kind of lectured by the banker back then and said, if you put, a tank of gas on it, pay it off right away. Don't build it up. So, but yeah, 94.
Well, you talked earlier about kind of the perks, like your first card didn't have perks or rewards. Tell me a little bit about that and what makes kind of some of those other credit cards versus others appealing or not appealing.
As a college student, you're really not going to get tons of perks on your card. Everybody, I'm sure, is getting those mailers in the mail from Discover, Capital One. Hey, you're a student, get a credit card. There's usually not a lot of perks. They're trying to roll you in early, thinking, hey, I got a card, and you're going to stay with them on a lifetime. So student cards don't usually tend to have perks, and we really don't. As a banker, I wouldn't want them to have perks because the only people who are getting perks are the ones who are using it on a big scale. I mean, that's how you get your perks. You're buying new furniture, you're going on a trip. College students don't usually have those big time expenditures, so there's not a ton of perks on the student cards. But when you graduate, you get a new job, they'll start to roll you into perks programs, which are good at some point. But at the same time, starting off, you shouldn't be looking for perks. You should be looking for a lower interest rate.
And, I think today having young adults in my household, it's not easy to get a credit card anymore. So, we talk about building credit and talk to me a little bit about that, even making sure with your checking debit account to be able to manage that to maybe get a credit card.
We're seeing a lot of problems out there right now when kids graduate. College adults graduate from college and they don't have a credit score because they have debit cards. They're not going out and getting credit cards. Then they have all the student loan debt because who doesn't have student loan debt? So they have all the student loan debt. They've been accumulating for 4 to 5 years and there's no repayment. Thus, their credit score, which we'll talk about in a bit, is a little bit low. So I have been and I'm going to have a personal experience. I have 2 kids, and one's in college, one's out of college. And one out of college, we didn't get him a credit card in college. He just used his debit card, didn't think about it. He graduated, and he went to buy his first truck, and we had help. And we pulled his credit score, and it wasn't really great. And it's because he had no repayment history. He had never had a credit card. He had never had a car payment. He just had all the student loan debt that had no repayment. So we had, I said, we need to get you a credit card. Well, it got a little bit harder as he went along. So what I'm advising, even if you're a freshman in college, sophomore in college, so I have a younger one in college. He was a freshman in college, and I said, you get a credit card. So you're getting these mailers in the mail. They're not the best rate. There are no perks. Just get one. Sign up for it and put a tank of gas on every month. Go buy some groceries, but pay it off every month, period. Do not use it. That's what your debit card's for because that's where the money is in your checking account. So that repayment that you're getting on that credit card, even though you're in college, you're accruing the student loan debt, that repayment that you're making every month on that small credit card, even if you're putting $20, $50, whatever, if you're paying it off every month, that will actually help your credit score improve. And anything over, we tell people, if you're over a 700, you're fine. That's good. The higher the 700, the fine. People always are trying to get to that 800. 700 to 750 is good. If you're over 750, that's probably where you want to be. But there's just no repayment for kids who don't have a credit card or a car payment. Mm-hmm. So they're coming out with these bad credit scores.
Yeah, so let's kind of, we're already talking a little bit about the credit scores. One, you kind of mentioned the role of the credit score. How does that impact? How can you check your credit score?
A lot of times, if you're getting one of these credit cards, there is an app or a feature with this credit card that you can go in and it will tell you your credit score, and they will pull, and it's not from, they're pulling it from, they're called credit bureaus, and there's 3 to 4 of them, and they're pulling from there. All credit cards, your debit card doesn't report, but all banks, any loans you have, all your student loans report to these credit bureaus. And they're monitoring how much you have outstanding on loans, how often you're paying, if you're ever a late payer, if you're in default, if you have bankruptcy. They follow all of that. So never be late, ever. If you have a loan payment and there's always make it. If you have to scratch to find it, because if you don't, if you're late on a payment, it will ding your score, And that score travels with you for 24 months. It's a long time to get that one late payment off. It does fall off eventually, but it takes 24 months, and it really does drop your score. And scores, like I said, 800 is kind of the high. Usually most people who have good credit are between 7 and 800. Once you fall below 700, it gets a little trickier. 650 and below, you're in a lot of trouble. And yes, you can repair your credit score, but it takes time, it takes diligence. And that's where if you ever get into that point that you pull your credit score and it's below 700, feel free to go talk to your banker. Go talk to your local hometown bank and just stop in there and say, I need a little help on my credit score, and they'll walk you through it. So, and how to fix it and what you can do. I don't expect people who are 18 to 22 to know all these ins and outs of finance. That's why us bankers are here to ask the questions, and we can help you.
I had no clue that it would take 24 months to recover. That is very interesting.
Right. And then there's different levels for late payment. So say you are late on your credit card, that will ding your score. But say you own your house and you're late on that will ding it worse.
Okay.
Because your house loan is just such an important part of everybody's lives. So everything, and there's an auto loan, they all have different levels of how much it'll hit your score and dropping. So just don't be late, period. I mean, I don't know another way to get around that.
Exactly. So we talked a little bit about the credit, getting credit score. Yep. So applying for their first card, you talked about, maybe going to your hometown bank, and talked about the ones coming in through the mail opportunities. If a student really is like, hey, I'm listening to this podcast, this is something I don't have now, what are their first steps?
There's so many options when it comes to credit cards. End of story. Like I said, if you're not getting ones in the mail, most college kids do. I mean, how they're getting it is because they have student loan debt. And I hate to say this, companies share, so they have your information. Look through those and, read the information. Just apply for one. If you're a little hesitant about that, that's okay. Go into your local bank. Bank Star, First Bank and Trust, Dakota Bank, First Interstate. We all have a credit card that's tied to our bank, and we can help you. If you're nervous to just do one from the mail, stop in your local bank. Even if it's not your bank, say you live, 3 hours away and you have a very local bank back home, just stop into one of the banks here in town. You can get a credit card even if you don't bank there. End of story.
Gotcha.
It's easy.
You did mention too earlier, I love how this conversation just keeps building on each other, right? The fees and the interest rates. Like, what would be if I am searching a card, and I know we're talking a lot about credit cards right now, but I do feel like most listeners probably have a debit card, right? So I'm not saying that we won't maybe get a little more into this, but I just feel like the credit cards are very intriguing and so much that people don't understand. So talk maybe about what maybe with the interest rates or the fees, what are some things that you want to look for when you are applying for a credit card?
At this stage in your life, and in this stage in our economy, there's really not very many low interest rate cards. You might see one that will have a really nice introductory rate of like 6% for 6 months, fine, but then it'll jump you to 21, 29. Ooh. And you think those rates, you're like, oh my gosh, that's high. But so you put $100 on your card. If you pay that $100 off, you will never get charged interest. If you pay that card to a zero balance every month, you never get charged interest. If you get to the point that, oh my gosh, I kind of had an emergency, I had to go buy tires, and tires cost me a little bit more, I can't pay that off, but it's going to take me 4 or 5 months. So say you put $500 on, and the first month you paid $100, you're only going to get interest on that $400. And every time you pay it off or pay it down, that your balance will drop, and so will your interest that's accruing. So when people get into trouble, and this is when they're only paying the minimum payment. You get your credit card, you have a $500 balance, and they'll say, oh, you got to pay a minimum of $27. You're like, oh, well, I'm going to just pay my minimum. No big deal. But you never get rid of that balance. You're just keeping up with the interest. you're never paying down that balance. So you're just paying the interest every month. And that's not what we want to see. You never get ahead. We try very hard to tell people, pay it monthly if you can. And like I said, there's times you can't. There's emergencies, and that's just part of life. And that's what credit cards are for, because like I said, if you need tires and I don't have $500 in my checking account, well, that's what credit cards are for, to help fill that void and that need and that hole that you just can't quite get there. And to come to the bank to get a loan for $500 for tires, that just isn't done anymore, unfortunately. That's where credit cards fill that need.
Yeah, and I think that is right. I think, having that mindset, it's kind of that emergency, but yet you still do want to use it once in a while, and to pay it off. And really, it's no different than monitoring your debit account and how much money. Talk to a little bit about maybe some tricks and tips of how to manage a debit account, and maybe, when to maybe, I know it's not about savings today, but, putting maybe some of that in savings, or how to work through some of that.
I really tell everyone, if you have a debit card, you should have a savings account, and it's, try to transfer $20 every month. If you're getting paid, say you have a little job and they're doing an automatic deposit into your checking account, when you set that up, just say, would you just put $20 in my savings too? And then maybe someday it's $50. Someday you graduate from college, maybe it's $100. And that's just how you accrue savings, because it's very, very difficult to build up savings. Another thing I always try to advise is, you have summer jobs. And you're making all this money, you're working 40 hours a week, and that's how don't keep it in your checking account. You figure out, hey, I need this much money to live on a week. Transfer as much as you can in your savings. And in today's digital world, we all have online apps.
Yes.
You can transfer between your savings and checking account as much as you want at will. And if that money is not in your checking account, which you're checking all the time. People are always on seeing what their balance is in their check. Sometimes like, oh my gosh, I have a lot of money, I can spend more. But if it's not there, you're not going to spend it. But it's there in a savings account. So I'm huge into transfer money as much as you can in your savings account. And when you need it, then move it over.
Isn't that the beauty of online banking now?
That's great. I mean, it's on your phone, for goodness sakes.
Yeah, I think I check mine, honestly, a couple times a day sometimes, only because, I have a son that's in high school, and he might be like, Mom, I need some money for gas. And so I'm like, okay, I'll just transfer it into your account. And I honestly, can help monitor some of his spending too when he does a DoorDash or something. I'm like, was that the best move? And maybe that kind of comes on to some of our spending, and having smart spends.
Right.
How do you help students or young adults maybe learn to budget or finance, and maybe put some money aside for those big payments?
Well, we'll start at the little thing, coffee. We all love coffee. We all, as I see, Shari has a cup of Starbucks right there. I did not bring my coffee cup. I'm a little bit more, to me, a Starbucks is a treat. It's Friday. Thus, it could be your Friday treat.
It is our Friday treat in the office.
So, Starbucks, I mean, with it $5 a cup, I mean, if you took that $5 times 7 days a week, cha-ching, you're up there. You're at $35 right now. End of story. Well, if you would maybe treat yourself to a Starbucks once a week and say, okay, and I'm just going to make coffee at home and have coffee the other weeks, you would save, you're already saving $30 right there. That's where things start. You're thinking, oh, do I need those new shoes? Need and want are two different things. Oh, I'm going to get those, and then, but maybe before I maybe I should look in my closet. I'm terrible about, I love those shoes. Well, of course I love those shoes. I have a pair in my closet. I love them same shoes. So a lot of times, do I need or want? College students right now are very transient. They're constantly moving. They're moving from dorms to homes to dorms to homes. Then they're moving from apartment to house. It seems like every other year. So the worst thing in the world to me is moving. So if you have less stuff, you don't move as much. And right now, I really think we're in a world of consumer goods. It's so easy to go buy stuff. You have Amazon, you have Shein, you have all these places. It's just so easy. Temu, it's so easy to buy. And you're like, I really think people need to say, do I really need this? Do I really want this? Don't I have a shirt in my closet that's somewhat similar, or shoes or a coat? I mean, it's one thing if they're wore out. So I really think that's part of, coffee, saving. I don't like to limit people's entertainment because I really like to have fun. And college students should have fun. This is their fun time in their lives. But at the same time, well, if I am going to go out for supper tonight, well, maybe then we shouldn't go out after. Go down to the local tavern and have a few. If you're going to go down to the bars and have a few, well, maybe stay home and have supper because it's so much cheaper. DoorDash. I am sorry, DoorDash is the hugest scam in the entire world.
Agreed.
Get out and go down to Subway and get it yourself. I mean, they upcharge you huge, and that is just laziness. I hate to throw that out there, but they're just taking your money. It's another $5 really to DoorDash. Okay, that was a coffee you could have had on Thursday. That could have put towards those new $60 shoes you wanted. Or instead of getting that sub for, $9.99, which is terribly expensive, well, go get that loaf of bread. And, so it's all about choices and just being smart.
Talking about smart choices, as you mentioned, the online shopping is super easy.
It's too easy.
I think of the online gambling that is occurring with the sports. How do you maybe protect or teach the consumer, whoever it is, it doesn't need to be a student, to assure that you're on secure sites? And then another aspect of that is, you see, I've got a subscription to Hulu and this and this and this and this, and you realize you don't even, know what you have.
Right.
So let's first talk about, protecting and making sure that you're on safe sites.
Gambling is tough. It's all around us. I mean, it's online. We have sports books now. We have, you go into anywhere, a gas station, and there's video lottery there. It's really hard. And gambling's addictive. It is. I have very close friends and family that they like to, and it's addictive. And they say, well, gosh, I won big, but how much have you put in? I'm a big fan of, if you're going to go and you're going to go downtown, especially college-age students, but even just set a budget. Say, okay, I am going to only spend this much on video lottery. And when that's gone, then you walk away. End of story. I mean, put a budget, because pretty soon if you don't have a budget, you just keep feeding, and hopefully you hit, and sometimes you don't hit. And so that's a problem. And same way with online gambling. It's so easy because it's on your phone. It doesn't feel like video lottery, you're actually feeding in those dollar bills. Online gambling, it's hooked to your account, which would make me nervous. And that's why I like online, everyone checking their accounts online. Is there any weird fraud things coming through? And if people do online, check into it, online betting a little bit, and do one site. Do one, don't do 5, just do one. But I'm just not a huge fan of it yet. It makes me nervous as a banker because I've just seen some horrendous stories which happen from gambling. But it's kind of fun. Don't get me wrong. I really like to.
As long as you can set a limit and have.
Agreed.
Yeah,
so,
exactly.
And that, talking about fraud, and then, that's why checking your online accounts, you said you check your account. Check it daily. Check it every other day, because if there's any sort of a line item that I don't recognize, that, make a phone call and find out, because everyone's clicking on stuff. I mean, you're on TikTok, click here, click there. Pretty soon you're buying stuff on TikTok, and same thing with Facebook. Facebook, Instagram, it's all connected nowadays. So that's why we say keep eyes on your accounts.
So what about if someone maybe doesn't have that self-control, for example, what about maybe the prepaid cards? What are your thoughts on that to maybe help manage? And is that a good alternative for beginners?
Yes, it is. It's just a little bit more inconvenient. But nowadays, if anybody has a job, or mom and dad need to Venmo you money, they have to put it somewhere. They have to put if it's not in a checking account with a debit card, they can put an account with a prepaid card. You can load a prepaid card, all that stuff. I mean, they're safer. They will help because there's just a lot of places that don't even take checks and cash anymore.
That is so true.
You need a card. So we do have people. And then this is the downside. You can get to a point that your finances are so bad and you can go into the bank if you didn't have say you relocated across the country. If your credit score is so bad, you might not qualify for a checking account or a debit card anymore.
Yeah, that's almost, that's like blows my mind thinking of that.
Yeah, there are, once, we've seen it. I mean, we see it all the time. People come in and they want an account. And we're like, you don't qualify for one because your credit score is so bad. We advise them, this is how you fix it. So that's when we really push the prepaid cards because they need something. You just, you're working anywhere. They won't they require you to have an automatic deposit on, so you have to put it on at least a prepaid card. So it's tough. That's why always keep eyes on your money. And if you get a little worried, go talk to somebody. End of story. There's all kinds of people out there who will help you. You just got to find them.
Yeah, that is so true. Well, we're going to, I just have a few closing questions today. So if a student or a professional, whoever, would come into your office, what would be one of the most important lessons about debit and credit cards that you would like to share with them?
I would say every college student should have a credit card. I know that sounds very scary. You have a debit card, but a credit card is the only way you are going to improve your credit when you get out of college. You might, or if you have a car loan, that helps also. You have to be making a repayment on a loan. That's what a credit card is. It's technically a loan, as a car loan is. Think of them the same way. Have one. Make some purchases. Pay it off every month. It will help you. When you get out of college, you want to buy your first car maybe, or you're looking to buy a house. I hate to say this, a lot of times when you're looking to go lease that townhome in Sioux Falls because you got your new job in Sioux Falls, they'll check your credit, and if your credit's not good enough, you're going to have to get a cosigner. So having a good credit score is very important. So having that credit card is huge. I have really been advising that probably for the last 4 years, just get a credit card. I don't care if you're 18, 19, 22, 28. Get a credit card. Pay a little, use it once a month, pay it off every month. It's that easy.
I think that's some really good advice because once I know people that have graduated from college and want to buy a car or et cetera, and they can't because they don't have any credit or they don't have enough, a long-lasting job long enough to be able to say, you are secure financially. So, yeah, I think that is great. So thank you so much, Jen.
Did you learn a little something?
I did. So the faculty and staff, we hope that they can use some of this podcast to maybe reflect with their students. And I think here are some of the questions I think that they could cover during that time. So what are the downsides of credit cards and how students can mitigate them? How can students find a balance between using a debit and credit card responsibly? And what resources today have been recommended to students wanting to learn more about financial literacy? I hope you learned something today for those listeners. I know I did. I appreciate your time today, Jen, and hopefully we can have some other conversations in the future.
That'd be great.
Thanks.
Thank you for listening to this episode of State of Wellbeing, a podcast from South Dakota State University. This podcast is brought to you by the Mental Wellbeing Team and SD State Health.